All right, I'm here with fellow Stonehill College graduate Scott Dussault. Scott and I graduated in 1993. I know it looks like we just graduated, but it was back in 1993. That's how I know this guy. I'm going to do a little introduction and I'll let him fill in the blanks. But today we're going to focus on the concept of the founder's mentality and how people, operations, and mindset play a role in every organization. Scott is somebody with just over 25 years of senior leadership experience, specifically as a CFO and a COO. He's worked in both public and private companies, building, leading, and advising tech companies through all stages of growth. He's got an extensive IPO background, both as an advisor and an operator in with relationships and investment banking, as well as the buy and sell side analyst community. So Scott, I'm going to be quiet for a second. Did that somewhat cover the,
You
your,
nailed it, my friend. You nailed it. That was aside from the 1993 and it being now what 31 years. Yeah, that was good. That was all good. I appreciate that. It's good to be here. It's good to see you again.
it's good to see you as well. I mentioned this to you before we recorded. I think it was last week when we were talking. I know you've got a significant background in finance, but I always think of you as like a people person. And I know that's probably unfair of me to say that, well, just because you're in finance, you're not a people person, but your personality has always led with me. And I want to say this, and you commented right before we started here. You're like one of the best prank phone callers that I've ever met in my life. And I know you can't do it anymore with caller ID, but this guy, we used to hang in his dorm room and we would go through the yellow pages and randomly pick out names. And you
People don't
could,
know what the yellow pages are, Dave.
I know, I know they don't, but you could keep people on the phone for 15, 20 minutes. It was amazing. And it was so nice. You're always so nice about it. Do you still do that anymore? Or?
Those days are over, but they were great. No, it's that's why I went to Stonehill. I don't know if I ever told you that, but I always have been, I knew I was a finance type person, and I worked at a CPA firm when I was in high school. But I knew that that can be career limiting if you're not able to connect with people. And I've always been. Yeah, you're right. I've always been that way. It's been something that I don't know. I'm a different soul when it comes to finance people, I guess. But it was maybe that helped. I can go back to those days at O'Hara, and those calls that I made maybe helped get me where I am today. So it wasn't just the incredible business school we had at Stonehill. It was also the ability to have fun at the same time. So
Yeah, and I'd like to take some credit for that because I was encouraging that behavior.
you certainly did.
Okay, good, good, good. Well, let's do this. We're going to talk a lot about your role and or your roles over the years as a CFO and as a COO as you've taken on assignments, you've brought companies public and seen them grow, and there's a manner in which you've evaluated these organizations. But before we get into that, just tell everybody a little bit about where you grew up, what you did for fun as a kid, and then ultimately we can talk about college and after college. But just give us a quick rundown.
Yeah, that sounds great. Well, as you know, I'm a Boston-based. I've been here my whole life. Grew up in Northborough. I currently live in Wayland. As a kid, I was passionate about sports because maybe that's what got my competitive drive. Baseball, basketball, football. That was kind of what I spent most of my time on, most of my time and energy on. I got to that point, like I said, when I was in high school, and I took an accounting course, and I was good at it. And right before Christmas break, my accounting teacher in high school said, "Hey, we're gonna second half semester we're gonna do a project, and if you do it over Christmas break, I'll get you a job." And I did. I did it over Christmas break, and I got a job in a CPA firm, and never looked back. And it was end of the period, last period of every day. I left school early and went and did this, and that's where it all started for me. Went to Stonehill because I wanted to become a human being and not just a numbers person that could fill out a spreadsheet. I won't even say the words the 11 sheet or 11 column, 14 column spreadsheets we used to use back in the day. But I wanted to do that, and I wanted to kind of become more of somebody who could write, speak, interact with people, engage with people, and that's what I did. I started my career at Ernst & Young back in the Boston office right out of school. And what I think I always tell people this: you always got to make your decisions on what you're doing based on what you want to do next. Tom Brady used to always say his favorite Super Bowl was his next Super Bowl. And I always say, when you think about your career, think about what you want to do next. And when I got to EY, I won't name the client, but I was on a massive insurance company, and I hated it. It just wasn't for me. And I was able to get my second year, I was able to move into the entrepreneurial services group. And again, it's taken off from there. I've done nothing but work with entrepreneurs, which is why this conversation is near and dear to my heart. I spent 7 years advising entrepreneurs and advising startups, and then the last 25 years operating in them. And so it's all I've done my whole life. And I think if you'd say, what are you passionate about aside from your family and for me, it's figuring things out. It's operating and helping startups cross that chasm and scale as a business. That's what I'm passionate about.
How much does your experience back during the E&Y days, how much does that experience with that insurance client impact you today?
It impacts me considerably because I know what I don't want. And I always tell people, it was funny when I was a manager in that entrepreneurial services group, I would often tell younger professionals, you want to get on my jobs because you're not going to be here forever. You're gonna have another job. You're not gonna, the public accounting is a pyramid, right? I think in my class of 60 some odd people, there's maybe 3 or 4 that are still left in the firm. And so I said, you want to get on my jobs because you're going to see so much, and so many industries and so many different companies, and that helps you really understand what it is you want to do. And yeah, well, I can tell I'm 52, from and I still don't know what I want to do next. I'm still looking for what's interesting next for me. And so I think understanding what you don't want to do is just as important as understanding what you do want to do.
So go back to that. I agree with what you're saying. I don't know that I had your mindset when I was coming out of school. You got there faster than I got there. Let's just put it that way. But you're always planning for your next job, or you seem to have the ability to forecast the future, or you have some clarity around where you'd like that to go. I don't know that that's the norm with people.
No, yeah, I think that's right. But that's why I think you got to understand what you don't want to do as well. Because I think you can start to eliminate things that aren't appealing to you, that aren't attractive to you. But just seeing everything. I was advising some. It's funny. I was actually advising a couple of Stonehill students. I had a couple of Stonehill students reach out to me recently on LinkedIn. One was a freshman, the other was a senior. So different ends of the spectrum. And they kind of thought, one of them had ironically enough, the freshman had a clear idea what he wanted to do. He was like, I want to be in finance, I want to go to a bank, and the senior didn't. And I said, you're never gonna know where your career takes you. You're just not. You just got to continue. So I advised him. I said, talk. I love that you reached out to me, which is why I wanted to have this conversation with you, because you got to talk to everybody. You see as much as you can see, experience as much as you can experience, travel, talk to people, do things like this, because it's something you actually will never know until you actually experience it, what it is you want to do.
So tell me about what you don't want to do. And I know everybody's different here, but when you think about the things that you realized maybe at 22, 23 years old that you didn't like or didn't want, what are those things, and of them, which still apply today?
I think I often tell people when I'm meeting CEOs, either in an advisor role or if I'm going to partner with them or looking to partner with them, and they ask that question, what do you want to do? So I get that question a lot. And I start with what I don't want to do again. And I'll never be the CFO at Exxon, right? Or, Mobil. I'm not, or, United Airlines. Like for me, I love to figure things out. I love to figure out how to get companies from A to B. And again, I did that as an advisor, and I'm doing that now as an operator. So I tend to look for companies that need to take that next step. I've always worked as a CFO with entrepreneurial companies. Either the company was led by an entrepreneur, or the entrepreneur, the founder, was still in the company. And I love those organizations because those organizations are the ones I think I can help the most. I think I know and I love the passion that drives that founder's mentality. But I also know that I've been there and done that, and I've seen so much.
Mm-hmm.
It happens when you've been working for 30 years and experiencing these types of things. So for me, that's what I love to do. I like to build things.
Yeah.
I always say I'm an operator who happened to be trained in finance.
Okay. Okay. What's a red flag for you? Whether you're looking to advise an organization or get into an organization, or potentially maybe you're aligned with a VC firm that wants to put you on an assignment. what are the red flags for you right out of the gate that would cause you to pull back and say, this is just not for me?
Yeah, it's funny. And this is something that I do on everything now. And I think I didn't do this earlier in my career. When I saw companies struggle and trying to figure out why they struggle. And, so what I look at is Michael Watkins wrote The First 90 Days, which is a book about, entering into a new project, job, whatever, either a new company or a new role inside the company. And he had a framework called the STARS framework. And for me, I try to understand where the company is in that STARS framework and make sure that they know where they are. Right. And the STARS framework is it's an acronym, obviously, for sustaining success, turnaround, realignment. Accelerated growth is the A component of it. So yeah, it's turnaround, realignment, sustaining success, startup, and turnaround. Right. So the concept is that every company, no matter where you are, whether you're a startup or you're a established company, goes through this framework. You're always in one of those places. And so when you think about it, for me, when I look at companies, typically they're startups. At one point in time, you're a startup, and startups are led by founders, and they're on a path to success, and successful ones get there. But then something happens, and always something happens, and it's not necessarily negative. It's just that there's if you're successful, guess what that brings? Competition. It's going to bring challenges. It's going to bring scale. And so at some point in time, the company needs to realign in order to continue to maintain that success. Every stage in that STARS framework, you're looking to accelerate your growth and continue to grow your business. But you make decisions differently depending on where you are in that framework. If you're truly in a startup, meaning you're in the idea frame and you're trying to take a product to market and you're building something in a garage, you're going to make decisions that are very different than if you're realigning. Or if you're sustaining success. You just are. You're going to be making them in without a lot of data, maybe without a lot of. You're going to be shooting before you aim, as Michael says in the book, as opposed to aiming before you shoot, which is what you do as in a sustaining success for realignment. Right. So the red flag for me is understanding where a company is in those four quadrants. And knowing that company knows that they're in one of those positions, because if you're not, inevitably you lead the company into a turnaround situation, right? No company goes from startup right to turnaround. Right. They typically are in a period of success and then realignment before they go to turnaround. But the decisions that are being made and the actions that happen inside the company are going to be different based on where they are. And you want to make sure that there is alignment there, because if there's not, you're going to spin. And I think those are the companies that ultimately aren't successful.
Right. So in startup phase, everything you've done is in the tech space?
Yes. Yeah. Everything I've done has been mostly software, but always tech. Yep.
How often is the product or the service being offered by that startup in response to a clear need or want in the market versus, the founder just having a passion for whatever, making something, and then they hope somebody buys it later?
Yeah. Well, I mean, every startup starts with a market, an idea for a market need, right? And I think when we talk about the founder's mentality, I think the concept of it, I mean, it's inarguable. It's an unbelievably, it's a pie in the sky and wonderful mentality, right? It's a, mentality of, hey, there's a problem in the market and I'm going to go fix that problem. I'm going to go passionately try to fix that problem. It's a customer-centric notion that there's something that needs to be done better, right? And I want to think of something disruptive. I think sometimes, to your point on whether or not there's a product market fit, timing is a big part of that. Timing is a huge part of that. I was a CFO at a company called Demandware, which was revolutionary in what we brought to market. We were early in the e-commerce days. When you think about e-commerce back in the 2000s, when the company was founded in 2004, I joined in 2008. When you think about e-commerce, the way that was built was you built it with the software led. It was mostly services led. It was either you outsourced it to a partner or you built a website, from scratch. You custom built that website. You ran the infrastructure. You ran the merchandising functionality. That's how it was done. And the other thing about e-commerce in the early 2000s, which is, I think, hard for people to kind of maybe wrap their head around today, is that retailers and branded manufacturers really didn't care about it all that much. So when I joined in 2008, we built a SaaS platform that was an e-commerce platform. So it outsourced sort of the infrastructure component, the uptime, if you will, the back end, and then also provided merchants and retailers with functionality, merchandising functionality to run their website, so that they didn't have to do it themselves. They could therefore keep up with the pace of change of innovation. And our growth was good, but it wasn't superb. And that was because in 2008, retailers still expected consumers to come into the store, and brand manufacturers didn't want to compete with their channels. So this founder was brilliant in his idea of bringing this to market of, you know what, this idea of cloud is going to be so important because retailers and brands can't keep up with the pace of change of innovation. There's going to be so much traffic on the web that they need someone like Demandware to take that burden off of them so that they can focus on merchandising and not infrastructure, right? But the market wasn't there yet. And it took a few years for that to happen. Now, we were passionate about what we did and stuck with it. By the time the financial crisis ended, the market was there, yep. Right? So even though when he started that company in 2004, people thought he was crazy. You're going to put a mission critical, consumer facing, revenue generating application in the cloud? No one's going to buy that. Not the least of which would be retailers and brands who don't care about e-commerce. But suddenly you come out of the financial crisis and it's 2010, yep. And broadband's ubiquitous, mobile's ubiquitous, and this little company called Amazon had changed our behavior, yep. In a way in which we now started transacting all the time and feeling comfortable with transacting online.
Right.
And again, coming out of the financial crisis, brands and retailers now knew they had to directly connect with their consumer in a digital way. And we took off. And it was a huge moment for the company. We took off. Our growth was great. We IPO'd the business in 2012. We had a great run. The company still exists inside of Salesforce today as our commerce cloud. So I think the product market fit component of it is somewhat not in the control of the entrepreneur, if that makes sense. And I think it's interesting. And I think that the passion of the entrepreneur to continue on and to rally his troops around continuing on and making sure that market moment is you're there when that market moment is needed is the key thing.
So talk to me about the human component of the technology space. It's here to stay. We know technology's here to stay. Look at how Amazon's evolved since the 90s. What was it? What was it? A platform that sold books or something like that?
It was.
And now look.
Books and CDs. I think pretty much the initial Amazon.
Yeah, and then look what it's become today. And obviously, if it wasn't for technology, it wouldn't exist at all. It's probably the closest thing, if not maybe it is a monopoly when you think about it. To what extent is technology the answer for companies? Is every company's opportunity like that of Amazon or not?
Probably. Yeah, no, I think I get it. And I think this is part of the vast majority of entrepreneurs or entrepreneur founders aren't taking their companies public. Jeff Bezos is an exception to that. And what I loved about what he did with Amazon is exactly what you just described, which is, wasn't Amazon a book company? And I remember, in fact, in the 90s, I was at EY and I had a manager that I worked with who ended up going to Lycos. And he would poll people and said, hey, would you guys ever buy music online? Like, would you ever do that kind of stuff and buy books online? And this is before broadband. This is during dial-up days. And so what I think was great about Amazon and the opportunity with Amazon, they evolved. If you look at that business today, what's driving that business is AWS today. I mean, they're still obviously a massive online retailer, and they are. But AWS transformed that business. And I think the evolution of Amazon is what made them Amazon. If they didn't change, if they continued to stay and do what they did, which is simply sell books online, they wouldn't have been nearly as successful. Someone would have come in and done what they did. And I think what I loved about what Jeff Bezos did at Amazon and where they are today is that evolution from where they were in the 90s, selling books online to selling everything online, but also becoming essentially a data storage company, powering so many companies' data needs today with AWS. Like, it is a totally different line of business for them. In fact, Andy Jassy, the current CEO, ran AWS before he stepped in and took over for Jeff. So, and that's what I think is the difference between being able to become an Amazon and not. And I'll give you an example of where it didn't work. BlackBerry. BlackBerry was the predominant, particularly within business, mobile carrier, mobile company for people like me. And they had their market share was incredibly high in the early 2000s. They owned the market, and they owned the market particularly within the professional users because of two things. One is that awesome keyboard. For those who use BlackBerry, they had a really easy keyboard. to send emails on with a mobile device, and the second was security. And they simply, so going back to the stars theory, when they were in a startup mode and built this phone with this incredible keyboard and the security features around it, they started to become a successful organization. What they did is they continued to operate as a sustaining success organization, and continued and continued and continued, and they rested on the laurel of that keyboard and that security. And then this other company called Apple came along, and they said, you know what people really want? They want apps. They want to be able to use their phone for everything. They want it to become a workflow productivity device, not just something to send emails on. And they took care of security as part of that. And they passed BlackBerry. And I remember, and I'll never forget the day. I was a late adopter. I'll never forget the day. In fact, I was at Demandware, I think it was 2008 or 9, and I was in a conference room on a staff meeting, and I was looking around, and everybody had an iPhone. And I still had my BlackBerry. And I was like, it's time. It's time for me to switch. And that's an example of a company that didn't evolve. And taking it back to that STARS framework, they were a startup. They were then sustaining success. They needed to realign. And their realignment need was competition in the market and understanding what the users really demanded. And to your point about product market fit, there was still a product fit, but the market was changing in that people were saying, security is actually fine with Apple. And, I can get away with using the Apple keyboard if I'm trading that for all these amazing apps that can make me more productive.
Yeah.
And that's what happened to BlackBerry. So the opposite of what Amazon did.
Yeah. So going back to what I was commenting on earlier, did Apple, in your opinion, know the customer better than its customer better than BlackBerry knew their customer?
I think so. Yeah. I think they were forward thinking. You think about Apple, and Apple's products, that they've, not just the phone, they're not necessarily always the first to market. In fact, they rarely are the first to market with their product. They just make it better, right? I mean, they weren't first to market when it came to music, when you were using things like
Napster or whatever.
Yeah, exactly. Yeah, exactly. And so, or even God, you can even go back to the Sony Walkman days, right? Mobile music, right? And so, but they made it better. They made it more compact. If you remember, the Sony Walkman was this big bulky thing. How do you run with that? Right. And the very first music app or the music device that Apple made was it could slide in your sock, right? It was just, and they just made things better. And they took ideas and made them better. And I think they did that with the phone.
All right, so let's get to you a little bit on the you're like a split between CFO and COO. I don't know how to refer to you. What do you consider yourself? Both? How do you lead when you go into an organization?
So I love being a CFO, Dave. It's what I tend to consider myself an extroverted CFO. And like I said, I believe that, I'm an operator who just so happen to be trained in finance, but finance is my bread and butter. For me, I love to figure out, and I think where I can be helpful to organizations is figuring out how to get to the next stage of growth and using finance or using numbers to figure out how to get there. My job, frankly, as an operator, is always to figure out what's the best allocation of resources in order to get the highest ROI, right? And it's as simple as that. Everything is a zero-sum game, even when raising money is easy, if you will, which it isn't right now. But even then, you still have a limited resources situation, and you've got to figure out how to allocate it accordingly. And that's what I just love to do. So for me, and that's number one. The second is I love being an extrovert. Yep. And being a storyteller, as I did so often with you, with people on the phone. I love to tell a financial story. And I think that's something that particularly in public companies, when you're investing in a company, you really want to understand the story from the CEO and the vision from the CEO. But the CFO's role is to take the story and bring it down to a level of qualitative information using quantitative information. And that's something that's not easy. But again, it goes back to figuring out how to build things. And I just love to do that. And that's where I think I love to spend most of my time.
So the fact that you value the story is cool, because you don't hear a lot of that. For financial, the finance people usually aren't talking about the story that the CEO is telling. How do you know? I mean, some of these founders are incredibly charismatic, and they're masters at telling a story. And so how do you decide whether or not you believe the story and whether or not they believe the story?
It's a good question. I think, I think it's talking to the rest of the team, talking to other people, right? I mean, at the end of the day, you're right. I mean, every founder, the best founders that I think I've worked with are passionate and humble. And so they when I say humble, they're not they don't let their ego get in the way. They want to surround themselves with people who challenge them and not just simply give them yes answers. They hire people that have characteristics that may be different from them, as opposed to people that say they're friends with, that they've worked with in the past, that'll just tell them what they want to hear. I feel like the more open and transparent the founder is, and the entrepreneur is, the more likely that story is true and going to resonate.
What are some of the qualities you look for in people? And when those qualities are missing, where do problems occur as a result of that?
Yeah, I think I'll tell you a story to give you the answer. Again, I think that's helpful. I was when I left EY, I went to a company called Storage Networks. This is back in 1999. It was kind of a high flyer back in the .com days. We weren't .com ourselves, but we had a solution that solved the problem for .coms. You started talking about product market fit, and the acceleration was just massive. I was the 35th employee or 36th employee in May of 1999, and we IPO'd that company in June of 2000. At the end of 2001, I became the CFO. I think it was just under 30 years old, or maybe just about 30 years old. And it was kind of a, hey, here you go. You're now the CFO of a public company in a market situation that's declining because the .com bubble had burst, and we're a public company. And that was a learning experience for me because I wasn't ready. There was no chance I could have been ready. Your first CFO role is a public company CFO role at a tech company during a time when there's a crisis going on. And so what I had to do is trust people inherently. And what I had to do is surround myself with people that were better than me. And so that's what I look for. I look for, going into an organization, I know what I do well, and I know where I want to surround myself with people who do things better than me. I learned really quick when I got to Storage Networks as controller that I sucked at being a controller. I wasn't really good at it. And I just wasn't. And so I immediately kind of shifted into a finance role. And I hired a really, really great controller who was much better than I was. So when I look at teams and I think about, teams that I want to work with, the first thing I look at is, do they have characteristics that complement me, as opposed to, I think a lot of people tend to hire people or want people that they feel like aren't threatening to them. I feel just the opposite. When I was at Demandware, I got to the point where I almost was bored because I had hired such a great team and they were flourishing, right? And so I always make sure that I want to make sure that you empower people and hold them accountable. But always hire people that are better than you, because I feel like when you hire people that are better than you, it gives you more opportunity to do something else yourself.
Well, it must have taken a lot of guts, though, to openly admit that you weren't good as a controller. The fact, you know what I mean? It's you're in a role that most people your age might not be in yet. And then all of a sudden you're looking in the mirror saying, I'm not good at this. I need somebody else to do it. That takes a lot of guts and humility, and there's risk involved. So how did you get to that place?
Well, we were running really fast, and it was a surprise for me. Like I'll never forget. Like I realized, that I was struggling at it. As mentioned, I was in accounting. I got an accounting degree at Stonehill. Passed the CPA exam on the first try. Went and advised companies on accounting. Right, I was an accountant. I should have been good at controlling, but I really didn't like it, and I'm not sure what it was about it that I wasn't really good at, but I think I just simply wasn't good at it, and but I was also kind of a do everything at the time because we were a startup, so I did a lot. And simultaneously, while I was realizing, hey, I don't really love the controllership, I really did like the finance side of the house. I did like what was then referred to as FP&A and planning and forecasting and seeing the future and building models. Like that was something that was attractive to me, and it was new. But I think you got to, I have a Peloton instructor that says nothing, that talks about stepping out of your comfort zone, because in your comfort zone, nothing grows.
Yeah.
And so I think you got to do that in your career. Is you got to make sure that you're looking at opportunities that take you out of your comfort zone so that you can grow. And that's why it was easier for me to make that decision at that point in time.
Yeah, so that kind of transitions us a little bit into that mindset category that I mentioned at the beginning. Before I go into that, though, I majored in communication. And I was I was so dumb that at the time I thought I was studying like TV and radio. And then I get into the courses and I realize, oh, this is all about people and small group communication and interpersonal communication, and really had nothing to do with TV and radio. But anyway, I went through with the major, never thinking that I would end up actually using it for my career, which it's just pure coincidence. But the reason I bring it up is a lot of like we've got kids at college age. You do, I do, and they've chosen to study whatever. Like my son is like you, he's studying finance, or the others exercise science. But who's to say whether or not they'll pursue those careers? Like when it's all said and done, they're going to come out of school and they'll either like it or they won't like it.
Right.
But how many people feel obligated to like it and to stick with it? Most people I know don't stick with what they studied.
Right.
But it's hard to get to that place where you say, I'm going to do something different. Some people get locked into it,
right,
and they can never escape. Any thoughts on that? Like on it's okay to let go, just like Amazon let go of selling books and music.
Right.
There's
right.
power in that, right?
Yeah, absolutely. Yeah, you nailed it. Again, I go back when I think about when I left Stonehill and I got my job at EY. I mean, in my mind, initially, before I graduated, I thought I'm going to be a partner at EY. This is great. I'm going to, I'd worked in accounting firm for 4 years in college in the summer. And that changed. And when I enjoyed what I did, but what I saw with the consulting these companies was that I wanted to do that myself. So what I told my son, and I frankly told my daughter is a special ed teacher. She graduated with that degree from Providence. My son is a finance major at BC. And when I was advising my son, both at looking to go to school and also even right now as he's a sophomore there, I said, look at everything as a training experience. Like everything in your career is about education and training and learning, as opposed to just I've got this siloed view. I've got these peaky blinders on, and this is exactly what I'm going to do for the rest of my life. Don't look at it that way. Look at everything as a training experience. Everything is a learning experience. Everything that you're doing is development into something else.
Yeah.
And I think if you think about it with that mentality, you go in with that mentality, that's where the best of the best version of yourself comes through, right? It can't be I'm stuck with something because it's just what I did. It's going to be whatever you're doing now is something that you're learning for the next thing that you're going to do. Goes back to that next ring that Tom Brady wants to win, right?
Right. And he might actually come back and do it. I mean, at this rate, I
could use him.
See him come back. I know we could use him. Let me ask you this on the going back to the stars philosophy that from the first 90 days. And one of the things you commented on is that the founder, you really want a company to know where they're at, what stage they're at. How often do they actually know?
It's a great question. I think this is, I think, where it gets the most challenging when it comes to founders and entrepreneurs. And I think having those conversations, and the reason for that is when you think about a traditional founder and that founder's mentality, I think of like 4 or 5 different characteristics. One is this keen sense of ownership, right? You're starting your own company, you're solving a problem. You're solving a market problem, so you're customer centric because you're focused on solving, because you want the customer to buy your product. You've got a massive amount of passion and you take a lot of risks, right? That's the founder's mentality. It's hard to argue against any of that. The challenge is success. That's where the challenge comes into play, is when you start seeing success, it becomes a mental thing of like, I don't want to change anything I'm doing, right? It's like, if I'm successful and I've been successful, and all of a sudden I'm now getting bigger and I'm bringing in more executives and things like that, it becomes almost a threat to the founder, because that founder's thinking, well, don't screw up what I've built, right? But the challenge is, again, if you're going to be if that startup is successful, inevitably it has to realign. It has to. Otherwise, you're successful in a market where there's no market, right? Because you're not. If you're successful, you got to have competition. If people see an organization doing something well, they're going to want to compete with it. They want to do the same thing. There's a big market, and I think that's where really getting an understanding if that entrepreneur knows where they are, not only knows where they are, but accepting it, right? Will they accept it? I think the startups that end up failing are the ones where that passion leads to growth straining, right? It's a headwind for growth because decisions are being made in an autocratic manner. You're not trusting your team's like I said before about when I think about what I want to do and surrounding myself with people, I want to surround myself with people that are challenging me, that are better than me, right? And I think sometimes that founder will look at this and say, look, I started this thing from zero and I got it to this degree. Don't tell me what to do. And unfortunately, that's just not the right answer. And I think the best founders, like the Mark Benioffs or Jeff Bezos, those are the folks that will maintain that passion or maintain that sense of ownership, but at the same time understand that the organization has to pivot and change and again realign in order to grow.
So you've got a lot of experience in many different environments, and you've seen companies grow and thrive, and you've benefited as a result of this experience as well. What's your observation when you go into an organization and you're talking to a founder for the first time or a new team for the first time, when it comes to your knowledge and your experience and their ability or willingness to absorb it?
Yeah.
And the reason I say that, and you probably know where I'm going, is that I've been in plenty of organizations over the years where they don't want to hear how anything was done anywhere else.
Right.
Stop telling me about what E&Y did, and stop telling me about American Express or Amazon. We are so and so, and
Right.
I get that. And at the same time, they'll always be that or worse if they don't maintain an open mind. So,
Right.
how do you respond to that?
The way I look at that, Dave, is the first thing that I do when I get into an organization is I dive in and understand the business. And that to me is the most important thing, right? It's like, and I spent an inordinate amount of time doing that before I join. Oftentimes I'll join. I'll say, I need a month or a couple of weeks because I am just a sponge in absorbing that organization, understanding what that organization does. I agree with you 100%. And I've seen this. I've seen where, particularly folks in my shoes, the CFO has come from a place and they walk into another place and then it's change. Everything's changing. I'm going to do things the way I did them before. Nothing could be worse than that, irrespective of where you are in the SARS framework, right? That's just not going to work, right? What will work is having a thorough understanding of the organization that you're in, and then applying potentially learnings from the past to that organization. That's where I think you get that connection, because again, I know I will get a lot more respect from the people around me if I truly understand the business that I'm operating in. And so I immerse myself into those organizations. I think you have to, because I think you're right. If you walk into an organization and you spend all your time making changes based on things that you saw happen in the past, even if maybe those changes might be right, they're not going to land. They're not going to land because there's the level of respect is required for you to understand what the organization you're in right now and how that's different.
Yes.
And there's many different ways. Let me give you an example of that. Demandware was a great example of that. In that Demandware was a SaaS business, but we were transactional SaaS and we were low volume, high dollar. Mm-hmm. And so there were folks that were within that ecosystem, within the company themselves or outside the company that would say, what kind of business is this? You're not SaaS. And I'm like, we're single instance multi-tenant. We're SaaS. We just happen to be different in how we go to market, and we happen to be different in terms of the character, the target market we're going after, which are large enterprises. And so, if somebody who is in constant contact or an SMB SaaS business jumped into Demandware and tried to apply SMB metrics and SMB ways of decision making into that business, they would have failed tremendously. It was just a different business, and you had to really understand that in order to articulate it, in order to make the changes or move the company forward.
So I'm all over the place because there's so much to cover in this, but I'm going to keep going back to things you've said throughout the conversation. The realignment piece, it's inevitable. If a company wants to grow, it's going to have to realign at some point, whether it's people, its process, its customers, blah, 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 right? How important is it for any organization to see the future before it happens?
Yeah.
You talk about these things. In other words, before they happen, if you and I were to go into business, right, which you'd never want to go into business with me, but if we were to do that, there could come a day where us liking each other and respecting each other is not enough to continue working together as partners. But we would have to talk about that first, right?
Yeah, I think so. I think and I think this is a challenge when companies go public, particularly startups, because suddenly you go from having this long-term vision of what you think the future looks like, even at Demandware, the fact that we early on, those early founders looked at the future of e-commerce and digital was going to be cloud,
Mhm.
which now it's almost predominantly cloud in every aspect, but back then it wasn't, right? And so, but having that vision and making sure that that's something that there's alignment on is key. And I think when companies go public, sometimes that gets hurt. You see a lot of companies that go public, the class of 2021, so many tech companies went public in 2021. I don't know what the number is, 90% or so are trading below their IPO price still today or have gone private. And that's because you start to focus on and get so centric on quarterly results and short-term answers. And you have to have both, but you always need to make sure that you're communicating the future, unequivocally communicating the future, right? And I think that's something that I think Salesforce has done a really good job at. They've always, I think, maintained their execution, but that long-term vision of being this customer experience platform. I remember I tell the story a lot, but they were a company that IPO'd in 2004, I believe. And when they took that company public, they were a CRM company. They sold in the mid-market. And the question was always, geez, can Salesforce really compete against Siebel in the enterprise with this SaaS solution, right? This software with a slash, right? But the long-term vision was always data, data, data. And CRM was the heartbeat of that. And let's build a customer experience platform focused on sales, marketing, and services with CRM as the heartbeat where the data sits, right? And that's always the long-term vision. And they've gone and they've now taken the entire market, not just Siebel in the enterprise, but they've taken the entire CRM market, competed with Oracle, right? And beaten Oracle there. So I think having alignment on the long-term vision is key. And also not just having alignment on it, but making sure you always continue to focus on the future. You have to, because that realignment is going to dictate it.
So, question on the people, right? So as a team is being built out, if I'm the type of founder that doesn't want anyone to challenge me, or I want to be the smartest person in the room, so I hire whatever, a team that's going to do what I want them to do. That ultimately is going to come back to bite me
I
when
think
and
so.
if I decide to bring in an investor or sell.
I think so. I mean, I believe that. I think I respect the founders and the founders' mentality, but I do think that at some point in time, this is why I think diversity is so important.
Mm.
You need to, as a company scales, you're going to have to bring in perspectives and observations outside of just yours. It just
Yeah.
you have to. You
Yeah.
can always have kind of that bigger vision, but you want to make sure that the team is proactive in seeing everything.
Right.
Because if you don't bring that vision in, you're probably going to get eclipsed.
Well, that goes back to just the mentality of the founder. And if I were you in your situation, or even me and the work I do, I'm always trying to size up what kind of person is this? Is this a
Mm.
person that needs to be the star of the show? Is this a person that needs to be the smartest in the room or needs credit? And if that's the case, it's almost impossible for me to help an individual like that.
Yeah.
In the end, they're exposed when the transaction happens. They're exposed as somebody who's an egomaniacal, crazy person who's surrounded themselves with less than people. But then the other side to that is some of them have built organizations to support their friends and family, with all due respect.
Yep.
And then all of a sudden they get to a point and they bring in an investor, or they potentially could be sold or whatever. And now the investor or that team, and I'm sure you've seen this from your side, is staring at a group of people where they're saying, I don't know what to do with these people.
Yeah. 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 Yeah.
Which is more common? Which is more common? Is it the
I,
CEO trying to keep out people, or are they protecting people?
I think it's a little bit of both, but I think you're hitting on a great point, which is, you know, I go back to the majority of founder entrepreneurs are not the CEO when a company goes public, because you're a different business at that point than you were when you were in the garage, or even when you were hiring your first 50 or 100 people, right? The notion of what got you there isn't going to get you there it's just real. And some entrepreneurs can make that leap. And I think and to your point on who these people are and knowing who they are, some can make that leap and some just simply don't. And where the rub comes into play is who's going to make that decision and tell that entrepreneur it's time. You want the entrepreneur to get there, but often they don't. And often they don't get there. And to your point, they'll surround themselves with people that will tell them what they want to hear, and they won't want different perspectives. And the investors have seen the value creation. And
Mm-hmm.
so, and oftentimes they'll be on a private company board, and they're the ones that are going to have to make those hard decisions. And will they make those hard decisions? And I'll be honest with you, particularly when it comes to technology and startups, a lot of times they don't want to make those decisions, and therefore they just let it ride. And that's where companies fail, because you've got an entrepreneur that may be in that seat that has had those great ideas and has brought that company to a certain point and has, made increased shareholder value along the way. And who's going to be that person that steps in and tells that person, it's time for change? And I think so many companies in so many organizations that don't do that end up failing.
Is it because they don't know that they should be doing that, or is it because they're avoiding it?
I think it's more the latter. I think at the end of the day, well, I think it goes back to who you're talking about. I think potentially the founder will think it's the former, because the founder is going to believe that, what I've done here has worked and I'm going to continue to do it and I know it's right. I think when it comes to the advisors, maybe the board or the investors or people that the management that have been hired over time, it's the latter, which is it's going to be really hard to tell the founder. And it's not a your baby's ugly conversation. It's more of a, in fact, I think it's just the opposite, which is why I find it ironic. It's, look, here's the opportunity ahead. We're crossing the chasm, right? There's another book reference. Crossing the chasm is about a product and product market fit, but it can also be about company scale, right? And can a company go from the early adopters to the early majority and cross that chasm? But it just takes different decision making. It takes more proactive decision making. It takes different perspectives. It results in the need to give distributed decision making, empowerment of people. And when you think about the notion of a founder, even if it's 1, 2, or 3 people, it's a small group of people where decisions are made in an autocratic way, right? And so you need to understand or blow through that headwind in order to take that step to cross the chasm. And I do think that it's hard. Yeah. It can be hard. The people that I often say this, when you're a startup and you're a founder and you're hiring your first team, and you're hiring and you make your first $1 million of revenue, and then you make your, say you get to 10 million in revenue. The people that are there during that time can be, but are often not the same people that are going to take that 100 million in revenue. Yep. Now they can be, certainly they can be, but they often are not. And I think making those decisions is just hard. And I think people avoid them, right? It's like me. Look, I've said this, right? You asked, in the start of the conversation, like, what do I not do? And I said, I'm never going to be the CFO of an Exxon. Like, to me, that's not where I thrive. It's not where I'm not going to thrive there. I know that about myself.
Right. Too many layers, bureaucracy.
Bureaucracy, too many layers. I think I like to build teams. And obviously from a CFO at Exxon, Mike, there's probably thousands of people on my team that I'm never going to even meet. Right. And so for me, it's different. It's also not my industry, but like, again, for me, it's about continuing I'm a growth CFO, not, and that's what I like to do and figure out how to continue to grow things. And I like to be on that path. But I think recognizing that particularly at the founder level is hard, because you're surrounding yourself with these people that got you there, but they may not be the people that get you there. And you have to make hard decisions along the way.
Yeah, for me, most of my time is spent helping people say things or deal with things that they are not saying and not dealing with.
Right.
Sometimes it's helping them get out of commitments they've made unintentionally, or they've led people to believe something and then found out later, oh, I can't do that, or that's going to be stopped, and now they've got to go back and retract their words. Right. So it's helping them get ahead of these uncomfortable conversations. How much does communication play a role from your seat? From what you can, from where you see things.
It's enormous, and when I take on a new project, particularly when it comes to the teams that I'm responsible for, I sit down with every one of those leaders and I start with, I don't want you to tell me things that you think I want to hear. That's not that, our relationship is going to be fostered by transparency. It's going to be fostered by authenticity, right? And to me, that's how I have to operate. Like I said, I trust people implicitly when I join an organization, because I think you have to. And could that burn you? Yeah, it can, 100%. But I think that's the only way you can be successful. And that's all about communication. And I think when you are in an environment where that communication is muted, or if it's in some way, shape, or form censored, that's when problems are going to inevitably happen. You can actually see it happen. And it's like, I'll make another Peloton reference. It's when you sweep something under the rug,
Yeah.
all you're getting is a lumpy rug, right?
Yeah.
And that's all that's going to happen. So to me, I've learned this very, very early on in my career. It is all about communication. It's all about transparency. It's about ensuring that you earn that trust right out of the gate. And you got to make yourself vulnerable to a large degree in order to make that happen.
Yeah, I think I agree with you 100%. I think when it comes to things like, say, for example, I've gone into organizations and they feel like they're phenomenal communicators because they have an open door policy, for
Yeah.
example. And it's the open door policy that's likely undermining all communication in the company because you come to me, you complain about so and so, and then I go deal with it. Now I've created this forest fire of problems.
Right.
The other thing that I feel like, and I want to get your take on this, I'm just trying to plant some seeds to see what you do with them, but is underestimating what communication means. If we're going to make a change, for example, how do we roll that out? How do we socialize that? How do we get in front of the people that are ultimately going to cause a problem when that information gets out there? Who's going to resist this? So I run into companies all the time. They're communicating, they're transparent, they've got open door policies, they're socializing ideas, but they're not always getting ahead of the problem that comes after.
Yeah.
What do you observe there?
I think communication and open door policy and monthly company meetings, all that stuff is not necessarily equivalent to transparency.
Talk about that.
Yeah, I think a lot of and I hate to use the word leaders because I don't think this is leadership. I genuinely don't. But a lot of, I think, people in leadership positions will think they're having these open door policies and think they're great communicators, but what they're doing is they're simply telling the story that they want to hear all the time. And frankly, that's just not only, I think, inauthentic, it's actually very dangerous, 100% dangerous. I think one of the best CEOs I've ever worked with used to start every board meeting with, here's the good, here's the bad, and here's the ugly. And two of those were quote unquote negative, right? There was a lot of good things that happened, some things that didn't work, and here's the things that we need that are challenges that we have to focus on, we can use your help with. And to me, that's the best type of communication and transparency that I think a lot of leaders or people in leadership position are afraid to have with their company because they're afraid to look vulnerable.
Yes.
They're afraid to say, look, there are challenges we have to deal with here. They want everything's up and to the right. Everything's great. Things are fine, right? And there are times when you have, that when those communications happen, you'll see someone that goes on LinkedIn, they'll say how great things are. And things are just wonderful. Look how wonderful we are. But that's not what's really happening inside the organization. And I think that great companies are the ones that can actually have those conversations because you're solving those problems that you said, like getting ahead of those things. Like I want to have a conversation with my teams and say, these are the challenges. Yeah. How do we solve them? Let's figure out how to solve them, because if we solve them, then we're doing great things and we're on to the next challenge, as opposed to let's just continue to shove it under the rug and your rub just continues to get incredibly lumpy. And at some point in time, that story is not going to hold anymore.
How would you handle this? You're a transparent CFO, COO, whatever you want to call yourself. You're transparent. You want me to challenge you. You want me to push back on you. How would you know? How could I do that in a way where you feel like that I'm putting it on the table? Where would the risk be? For example, like how do I not leave the room and say his mind's already made up? It really doesn't matter what I say. Yeah.
Well, it comes into doing what you say you're going to do, and that's another part of this, right? Because I think there's a lot of, when you talk about looking at companies, so many companies will throw their values on their webpage.
Yeah.
Right. Yeah, and how many times? Yeah. No, not only does nobody know them, but you kind of figure out pretty quick that it's kind of BS. And many of them are they tend to be the same, from company to company.
Yeah.
But the minute that one of those values is demonstrated in the antithesis of what that value stands for, you lose all credibility, 100% all credibility. Yeah. So to answer your question on exactly that, I can't come to you and say, I want you to challenge me. I want you to not tell me things necessarily that I just want to hear. And then you come in with something and you walk out with that, I've already lost. Like to me, the credibility is now gone, and you might as well just not even stop saying that. stop saying that you have an organization filled with integrity if you're doing things that are at the lowest of integrity, that you're doing things without a moral compass.
Well, I think I've seen it on the other side where the founder really wants honest feedback. They really, really want it, but they haven't necessarily selected the right team. And you might observe a
Yeah.
COO who is still hedging,
Yeah.
because deep down, I don't want to go. So if you felt or if I felt you were hedging, for example, I would say my biggest concern is that you still are telling me what you think I want to hear. I want you to tell me what I'm not going to like right now.
Yeah. Yeah.
Will you go to that place with people?
Yeah, I think you can. I've had that experience happen to me before, right? Where, so I understand. I think you're right, because I think one of the things I often tell people when I started early in my career was, hey, if you're thinking about leaving, you know, for whatever reason, give me some heads up or advance notice. I can help you.
Yep.
And I think employees will look at that and think, I can't trust that.
Right. Right.
But examples of when that's worked need to happen, right? Because they have to see that they can do that. And I've been in that situation. People in every company, you can't assume people can outgrow companies. Sometimes that's okay, and I think that's the kind of thing that you have to continue to reinforce. I was in an organization where, I did have somebody that was a direct report that would always agree with me, and so what I would bring to the table with this person was examples where somebody else on our team brought up a perspective where I was like, yeah, I missed this. This was something that I was going over here, and she brought up this opportunity over here, and I realized that was the better way to do it. And try to do that sort of, and I praise that person publicly, right? Yeah. And I think that's the thing that you have to do in order to break through that, because you're right. I think it's just human nature, I think, particularly when you're in a hierarchy situation, to have that person not be comfortable just because of the past, right? I'm sure they've been in organizations where it's not good to challenge people. I've been in organizations where people didn't want to be challenged and it didn't work out, right? And so I can see where that becomes an issue. And I think in order to break through that, you've got to sort of amplify the situations in which that challenge was something that was embraced.
Yeah, I mean, just because somebody's a founder doesn't mean they're emotionally mature yet. It just means they founded something.
Right.
And I've had plenty of founders not be able to handle candid feedback from their own teams, even when delivered appropriately, they take it personally. That's and right. they've held it against their team. So I have seen that. I've also seen others that have done well. It actually reminds me of a conversation I had with my daughter. It was last week or the week before. And we were having a conversation on blind spots.
Yeah.
And I had to go into a meeting with a group that I'm in, and we were talking about what blind spots do you need help with? And I'm thinking, well, if I know about it,
how do you know if it's a blind spot?
Right. So I was talking to my daughter who was sitting there having breakfast. I said, Emma, what do you think I don't know about myself that you know? Like, what drives you crazy about me? And she's just sitting there staring at me. She goes,
trick question, Dad.
She goes, do you really want to know? I said, yes, I do. She goes, well, I can't stand it that you don't click the dishwasher shut. It drives me crazy. And I'm like, the dishwasher? She goes, yeah, you just close it and you never click it. Don't you notice I always click it when you leave? I'm like, no, I've never noticed that. And I go, what else? And she said, I can't stand that you're always telling me to shut the lights off. Every time I walk in a room and turn a light on, you're always asking me to shut it off, even if I'm in there. I'm like, okay. I go, what else? Give me something that's harder to hear. She goes, well, she said, when you eat food, your mouth is always shut, but I can hear your jaw, and it drives me crazy. And I'm sitting at the table like, but it was such a great, and I go, are you serious? She goes, yeah. I go, that drives me crazy too about people when I can hear them chewing, even if their mouth is shut. But we had this hysterical conversation about what really makes me drive you nuts.
Right.
So anyway, I almost feel like something like that, as ridiculous as that sounds, needs to happen between founder and leadership team and management team and employee. What's going to piss you off about me, et cetera, et cetera, et cetera. What's your take on that?
Yeah, no, I think it's really great. I think, first of all, that's an awesome conversation. I think I'm going to try to do that with both my daughter and my son, and see where I land on that. I'm hoping that there is minor as not shutting the dishwasher. That would be awesome. I'm not sure they will.
Well,
But no, I think
if it was my sons, it'd be much worse. But anyway, go ahead. I'm sorry I cut you off.
I think again it comes back to I think developing that relationship with the team. I truly do believe that. I think that there's got to be an authentic and comfortable relationship with your team. I work for an HCM company that talked a lot about um, bringing your genuine self to work, right? And they really believed in that. And that's how I am. Like I'm kind of the same dude here talking to you that I am inside an organization. And I think that it's important when you're building teams to be able to have those conversations so that you know, if I'm responsible for human resources, I can go to my chief people officer and have that same conversation, and she'll give me the same answer back. Like she'll give me that answer.
Yeah.
I think it's just so dangerous to not have that. One of the things that, frankly, I worry about with the new world we're in is that in order to foster those relationships, I believe it has to be collaborative and it has to be, you have to break bread with people. You have to be able to, you have to crank call with them in a dorm room on a Friday night, and have those kind of laughs and that connection.
Yeah.
I worry about the next generation of professionals if they're in a fully remote environment, never being able to make those connections, those human connections, and therefore never having that development in themselves to be able to tell somebody that is their superior. I don't like when you chew, I can hear it, right? You have to, it's about developing relationships.
Yeah.
And to me, you gotta put the, I hate to say effort because relationships really should be organic, but you got to focus on it. You got to be committed to it, right? Committed to making that relationship happen. And when you make that relationship happen, good things happen. I think I mentioned the CEO that talked about the good, mad, the ugly. Well, he was it was a Boston-based company, but he commuted from Reston, Virginia, and so he was up here and he sat in a little apartment in Waltham Tuesdays, Wednesdays, and Thursdays, and I spent a lot of time with this man, right? Because he was alone, and so we had dinner a lot, and we made sure that we spent a lot of time together, and that level of trust where you can have those conversations just happened. They just happened, and I think it's almost like becoming a friend with somebody. You in order to be successful, you have to have a well-oiled and functional team. And I think the best teams are the ones that can have those authentic conversations with one another and actually mean it, not just say it, not just say we're going to have, no drama in our team, but truly practice that and truly have those conversations where you can have those conversations and feel safe about them and not feel like you're going to get slapped in the head for saying that you don't shut the dishwasher all the way.
I've been working on that, by the way, since last week. I've been clicking it. Couple things I'll say is one, I think I've seen you, other than Zoom, I think I've seen you maybe once since we graduated. Full disclosure, right? I think one time or twice I saw you at Demandware, but you're the same guy. Yeah. I feel like it's 1989. It's the same guy, the same voice. Obviously, you've moved on, you've had a family, you've gotten married, you've done well in your career, but you're still the same person. The reason I bring that up is I think in order to get to know somebody, really, you and that person need to have some element of self-esteem. You've got to know who you are and who you're not, and so that you can reveal it. Because if you're not good with yourself, you're never really going to have those relationships, and that carries into work as well. I could honestly, we've blown through an hour here, and I'm like, I want to be respectful of your time, Scott. How do you want to wrap this up? As you think about the next few years for yourself, what message do you want to leave the audience with? I'll let you wrap it up.
I think, look, we spent a lot of time, I think, talking about, the entrepreneurship, founders, where companies are in their cycle. I think what all this comes down to, and where I think this becomes, put together in a box, is understanding what leadership really is. And to me, that is the most important takeaway. And at the end of the day, leadership isn't a title. It's not an executive role or a C-level role. Leadership is about being a servant, right? And leadership is about serving others. I think one of the things that I think I'm most proud of in my career is how many people that I've worked with that have gone on to become CFOs, right? And so when I think about how you can make these communication gaps narrowed or make them work, how you can make sure that you understand where people are, is good leadership. right? Ensuring that that teams know that you're there for them and they're not there for you. And when you do that, you start to, I think, create a bond, and you start to create an organization that really starts to pull together as a team. And to me, that's what leadership's all about. And I think that's what, scaling companies is all about. That's what I think crossing the chasm is all about. That's where I think identifying where you are and being honest about it is important when it comes to that STARS framework and that sort of thing. And to me, that's what I like to do. I like to, for me, it's about, being authentic, ensuring that I am not the guy who thinks that I know everything in the smartest person in the room. I want people that will be authentic back with me, and I think that's the best and most enjoyable environment. And those companies are the most successful, and those are the ones I want to be involved with. So
excellent. And if anyone wants to reach out to you or connect with you or talk to you about anything, what's the best way to do it? LinkedIn?
LinkedIn's perfect. Yeah, I have my email on my LinkedIn bio. So yeah, that works great. That works great.
It's Scott Dussault, Dussault, correct?
You got it. You got it.
Scott,
still the same.
I enjoyed it, man. This was a fun conversation. Thanks.
We got to get together. We got to get together and grab a beer. We'll keep the phones out of it. Leave the cell phones in the car and catch up in person. We need to do that next.
I would love to. We'll after I hit stop record, we'll set something up.
Good. I love it.
All right, Scott. Thanks, so much. Dave. Okay.